What is a hedge fund? Why do we keep hearing about them when something huge happens in finance, crashes, scandals, or billion-dollar wins? Some hedge funds managers make more in 1 year than entire countries produce in value.
By the end of the video, you will understand exactly how hedge fund works and more. Let's go.
They bet on everything, from Apple stocks to whether a currency will collapse, to whether two companies will merge or sue each other. They operate in secrecy, they take huge risks. Sometimes they win big, sometimes they destroy markets. But what are they really? At its core, a hedge fund is a pool of money from rich people and institutions. These investors hand their money to a hedge fund manager whose job is to grow that capital quickly and efficiently. Unlike traditional funds, hedge funds can invest in virtually anything, from standard stocks and bonds to exotic assets like commodities, private companies, or even bets on currencies and real estate markets. Some even trade volatility or insure against natural disasters. Yes, seriously. Hedge funds are meant to be flexible. They can go long, go short, leverage up, or sit entirely in cash, whatever they think will make money. But they are not for average investors, only accredited investors. Those who earn over $200,000 a year or have $1 million in net worth can invest. The biggest difference is freedom. Hedge funds operate with fewer rules and more secrecy. Mutual funds, for example, must stick to specific strategies, publish holdings regularly, and are tightly watched by regulators. Hedge funds? Not so much. They disclose trades quarterly, often with significant delays. That's why they are sometimes nicknamed stealth capital. They also have the freedom to short assets, betting on them to fail, which traditional funds often can't go. Hedge funds can also use for more leverage. While mutual funds might use a limited margin, hedge funds can borrow 5x, 10x, sometimes even 30x the capital they manage. This means higher upside, but also massive risk. How do they make so much money? Two words, 2 and 20. They charge a 2% fee on all capital they manage, win or lose. So if a hedge fund controls $10 billion, they make $200 million in fees alone. Now, add the performance fee, 20% of profits. If they make $1 billion in gains, they keep $200 million more. Some funds negotiate even more favorable terms with clients, like 3 and 30. These fees mean that even mediocre performing hedge funds can be extremely profitable for their managers. And in good years, legendary. Take Citadel, they made $16 billion in profit in 2022, the biggest ever. Hedge funds use some of the most creative strategies in finance. Here are the main ones. The first one is long and short equity. Buy companies they like, short those they think are overvalued. The second one is global macro. Place big bets on global economic trends, currencies, interest rates, political events. George Soros used this to make $1 billion shorting the British pound. The third one is quantitative. Use algorithms, AI, and statistical models to trade faster and smarter. Jim Simmons' Medallion Fund is the most famous, over 16% average return. And the fourth strategy is event-driven. Bet on corporate events like mergers, bankruptcies, or lawsuits. Some hedge funds mix all these strategies in one fund, a multi-strat approach. So how do hedge funds make billions? Let's be honest, it's not just luck. Hedge funds make billions because they take bold position, move fast, and charge huge fees. When all of this is done right, that's how they make billions, and that's why they dominate headlines. If this video opened your eyes, hit a like. Would you trust a hedge fund with your money or stay far away? Drop your thoughts in the comments and subscribe for more.